What's up? What's going on, guys? We are back with another video, and today we are going to be going a little bit more in depth with buying versus selling in the Forex market. Now, I know there are a lot of you that are confused as to how exactly this charts, like this market works. You know, you just look at the chart, it looks like a heartbeat monitor. It's just bars going up and down. You have no idea what it is that you're looking at, and a lot of you are just clicking buy and sell versus pure just like gut instinct. And hopefully in this video, the goal is to help you understand a little bit more of how the market works, how the market moves, and what it is that we're ultimately looking for when we're either hitting that buy button or when we're hitting that sell button. So as always, guys, if you're not already subscribed, make sure you hit that subscribe button, drop a like if you enjoyed this video, and let's get straight into it.
Just see those sleigh bells jingling, ring, ting-a-ting-a-ling. I'm on to lovely weather for a sleigh ride together with you. Outside, snow is falling and friends are...
Hey, what's going on, guys? It is your boy RockStarr back with another video, and as I said, today we're talking about buying versus selling in the Forex market, or just in day trading in general. Now, when it comes to day trading the markets, a lot of people mix up trading with investing. Like when I say investing, I mean like, for example, buying a stock, right? You mix up stocks and Forex. You buy a stock, the objective is, obviously if I'm buying company stocks or company shares, I want the company to do good. I want the value of that stock to increase. This is why most people only believe that you can only make money when the markets are going up. You can only make money when, you know, the company or even a currency is going good. And this is not at all true for day trading. In fact, when it comes to day trading in the markets, we actually make money on both the buys and the sells. So yes, you can make money whether the market is going up, or you can make money whether the market is going down. You just have to know or be able to predict where it's going to go. And based off of that, see, when we're day trading, we're not looking for long-term, you know, a portfolio gains. We are looking for quick in and out of the markets kind of thing. And even when I say day trading as well, I don't necessarily just mean day trading. Some of you may be like, you know, swing traders. Maybe you're holding it for like a couple of weeks. Maybe you're holding it for a couple of months. But the objective is all the same. The objective is to hold a position for a period of time and get out when it's time to get out. Unlike stocks, you want to hold a stock for as long as possible, right? If I buy, you know, 100 shares of, you know, Amazon, I'm going to hold Amazon for as long as I can, right? It's not the same thing with day trading. So that's the first thing we're going to talk about here, is being able to understand that we are buying and we are selling in the Forex market when we're trading Forex, when we're trading cryptocurrency. So let's go ahead and let's look at the charts real quick and make this hopefully a little bit more clearer for everyone here. Okay, so this is your typical chart, all right? Right now we are looking at the Euro USD on the 30-minute time frame. So being that we're on the 30-minute time frame, that means each one of these little candle bars right here are pretty much what the market has done within a 30-minute period of time. Now, in one of my last videos, we spoke about pretty much technical analysis and just being able to draw up that support and resistance zones to kind of understand when the markets is going to be going down or when the markets are going to be going up. See, what we have to realize is that the markets, they move in patterns. They pretty much do the same thing over and over and over again. And if you can identify where it's going to go next, this is where we make all of our money. So when we're talking about buying versus selling, this is what I want you to understand. Whenever we are looking for sells, typically the market is at a high point, right? So you want to be able to sell high. And I'll go ahead and I'll make that red. All right, just so that we know we're selling. You want to be able to sell the market when it's high. All right, and vice versa. You want to be able to buy the market when it's low. Now, I know most of you have probably already heard of these terms before, buy low, sell high, but there are some of you that are still kind of confused about this. So let me break it down to you in a way that you might understand. I like to use sneaker flipping, for example. I live in New York, right? It's like, it's pretty big over here. So let's say, or just shopping in general, like if I go out and I want to buy something, right? Let's say it's Christmas right now, right? So we're going Christmas shopping. Ideally, do you want to get your gifts? Do you want to get the toys while they're on sale? Do you want to get them at a lower price? Or would you rather get them when they're at their peak point and, you know, everyone's buying it and the price is just high? See, if I was going out and I was getting a PlayStation 5 right now, right? I would want to get the PS5 at the lowest price that I could possibly get it at. I don't want to pay $1,000 for a PS5 when I know I can pay $700 for it, right? So that's where the concept of buying low comes into play. What you want to be able to do is understand when the markets are at a low point so you can get in at the best possible price to be able to ride the market up to the high point. Now, obviously, when the markets are at high points, like what I'm circling right here, you guys see these, right? When the markets are at high points, we are looking for sells in the market, right? So it's like if I bought a pair of Yeezys, if I bought some sneakers, right, and I got them first when they were $250, now they're sold out, right? The price drove up, right? The demand went high for them, so now they're sold out. Well, guess what? I'm not going to sell these Yeezys for $250. I'm probably going to sell them for $500. So now that the demand is there and there's more people that want these Yeezys, they're trying to get in on this price, right? Boom, I'm going to sell it at a higher price. So that's where the sell high concept comes into play. The easiest way I can put this into terms for trading, right? For trading, for example, is Bitcoin. A lot of you here may be familiar with Bitcoin. Back in 2017, Bitcoin wasn't really worth much, but then at the end of the year, Bitcoin shot up to what? Almost like 20K, right? Now, what happened? Well, eventually, market corrected itself. People started to sell off at that high point. They made their money. They got out of the markets. They sold off. And then what happens? Other people started to panic. They pulled their money out, whatever. Bitcoin dropped again to a low price. So then what most people do is, when most people look at this low price and they say, oh, well, it's crashing, it's going down, I'm not going to get in. No, investors, traders, we look at the low price and we say, this is perfect. Price is low. I can get in at an even better entry right now. And obviously those who got in Bitcoin when it was $3,000, right, make a lot of money now that it just broke 20K a few days ago. So put that into perspective. When we're buying low, when we're selling high, right, we're looking for areas in the markets that we can get in at the top or we can get in at the bottom, okay? Now, the markets only move really in three directions, and I want everyone here to understand that. They only move in three directions. Let me zoom out, see if we can take a better look at this, right? But the markets move in three directions. They move down, as we see here. They move up, as we see here. But then we have movements like this. It's not really going anywhere. And this is sideways movement, right? This sideways movement is called consolidation. I want you all to write that down. So it moves up, down, and sideways. Typically, the majority of our money is being made on the ups and downs. If you're scalping or if you're trading binary options, you can make money on the sideways movement. In fact, most binary options traders do trade that sideways movement because you can get into a lot more entries that way. So now that we got those basics taken care of, let's talk about what actually makes the market move. Like, why is the market moving the way that it's moving, and pretty much what are we even buying or selling, right? So first and foremost, why does the market move like this? You can't really pin that down to one specific thing. It's a bunch of different things. It could be the banks. It could be your economy. It could be news, right? Maybe a new president or something like that just came. It could just be buyers versus sellers in the market. There are tons of different things that move the foreign exchange market. Obviously, it's dealing with currencies. So when you're dealing with currencies or a country's currency, it has a lot to do with what's going on in that economy. So that's first and foremost. But on the other side, it also has a lot to do with the players in the actual market itself. How many people or who is buying the currency versus who is selling the currency, right? And which one is winning, right? Do you have more buyers or do you have more sellers of the currency? So those are little things to take into consideration when you're looking at these markets. Now, what is it that we're buying or selling? That is the big question, because when we trade stocks, right? Everyone here should by now be somewhat familiar with the stock market. But when we trade stocks, you are typically looking at one stock, right? One stock. So it's like Amazon, right? One stock. If I'm buying Amazon, I'm buying just Amazon. If I'm buying Apple, then I'm buying just Apple. But when we're trading currencies, you're not just buying the US dollar, right? The currency doesn't look like this when you're on the chart. It doesn't just look like this, right? Here's how it looks, right? It will look something like this. Euro/USD. Now, this is what confuses a lot of people because they don't get this part. You see, when we trade currencies, these are actually called currency pairs, right? Currency pairs. Now, I did a video a few days back. I believe it was What is Forex? If you haven't done so already, make sure you go check that out. But in that video, I spoke about the different types of currency pairs. So you have major, minor, and exotic. Those are the three main types, right? And what these are is when you're trading Forex, you're typically trading one currency in exchange for the next. So if you guys have ever traveled to another country before, right? Let's say I go to Europe right now. Obviously, when I go to Europe, I cannot use my US dollars in Europe. I have to change my US dollars to whatever dollar they have over there, whether it be, you know, the GBP or whatever the case may be, right? Depending on where I go, right? So when I get to that location, though, my US dollar, when I exchange it, there's a specific exchange rate when I get there, right? If I go to Jamaica and I exchange my US dollars for Jamaican dollars, there's a specific exchange rate. I might get 100 Jamaican dollars for one US dollar, right? If you've ever traveled to a different country before, you know what I'm talking about. It's not always going to be the same exact price. Now, these currencies always fluctuate. They always go up and down. Obviously, like I said, depending on what's going on around the world, what's going on in their economy. So if I go to Jamaica and Jamaica's economy is doing bad right now, and I'm coming from the US, then my US dollar is going to be worth a lot more in Jamaica, okay, than it would be if the Jamaican economy was doing really good. All right. Hopefully that example makes sense to everyone here. So if I go to Jamaica today, my US dollar is not going to be worth the same amount if I were to go 6 months from now. Right? It's going to fluctuate. It's going to be a little bit different. It may be just $1 off. It may be $5 off. It may be $10 off. I don't know. But it always fluctuates. So when we're trading in the market, the beautiful part about living in the world that we live in today is that we have access to the internet. So you don't have to anymore go to a country and when you get there, exchange your dollars. You can do that right off of your computer, off of your cell phone, off of your tablet, whatever the case may be, and you can make money just by exchanging those currencies online. So if I know that the European dollar is set to be going higher against the US dollar, then what I can do is I can get online and I can actually exchange my US dollar right now. I can exchange it virtually for more European dollar. That's what you're doing when you're trading. You're exchanging one currency for another. So obviously, if you know the euro's going up and the USD is going down, exchange it. You're going to buy Euro USD. You're going to buy more euro in exchange for your US dollar. You're going to ride that price up, and that is how we make our money. Now, let's say the European dollar was going down. What I would do is I would get into the market and I would sell the euro. I would sell the euro off for more US dollars. Now, the beautiful part about this is that you don't physically have to have the actual currency. You're trading it in the market. You're trading the value of a specific currency. So it's not like I have euros in my wallet or even euros in my bank account. I don't have euros in my bank account. I'm not trading the currency itself. I'm trading the value of that specific currency. So there's always going to be two currencies in one pair. You obviously have the base currency, which is the currency up front. In this case, it's the euro. And then I just call it the secondary currency to keep it simple. So you got the base and the secondary, right? Secondary currency is the second one in the currency pair. Now, here's what you have to understand. Whenever we're trading, the base currency, okay, is going to be the main currency on the chart. So for example, Euro USD is what we're looking at right now. This chart is based off of the euro. Okay, it's what the euro is doing against the US dollar. So if this chart goes up, that means the euro is winning against the US dollar. If this chart goes down, that means the euro is losing against the US dollar. So very, very simple, very straight to the point. Now, what are some ways in which we can identify or even just be able to tell what the market is going to do next? Well, there's something called technical analysis, where as on my screen, you guys see here, I have lines and stuff like that on my screen. You can follow support, resistance, trend lines. You can use tools like indicators and stuff like that. These are all things that'll help you because the market ultimately moves in patterns. It does the same thing over and over again. As you guys see here, look. So I had this resistance line here, and if you're not familiar with support and resistance, it's okay. But I had this resistance line here. All right, as you guys can see, market came up to this resistance line multiple times. It hit it, right? But it could not break. So I know every time it comes up to this zone, I'm looking for sells. Eventually it's gonna break, but then it'll break, and what will it do? It'll come back and retest that same line to try and see if it can what? Use it again. It bounces off, right? Because it can't break it. And it will most likely either end up going in an uptrend, or if it does make its way back down, I know it's going to retest and bounce off again. So something like that will be called a technical analysis. Now, I did do a video about the 3 types of analysis and which one is best. Go check that out as well. But this is called technical analysis. Another way would be a fundamental analysis. So a fundamental analysis would be more or less what's going on in the news. So if you use a site, I use what's called ForexFactory.com. You guys can check it out as well. But ForexFactory.com, you can get on here and you can actually see the news, okay? And it will tell you if there's any major news. By the way, these red folders are major news. Those are the ones that you want to pay attention to. And I would not advise trading anytime you see a red folder, okay? Whenever you see a red folder, no trade zone, because it's major. We don't really know what's going to happen, if it's going to impact the market in a good way or a bad way, all right? And obviously you don't want to be in the market if it just so happens to go the opposite way. But checking out the news and knowing just stuff like this is another way to be able to tell which way the market is going to go. So there's plenty of ways to identify and really understand this, but the main concept is just understanding buy low, sell high. And if you can do that, and you can get good at learning these patterns and learning the market and learning structure, you can make a lot of money trading Forex in the currency markets. So with that being said, guys, hopefully this video made sense. If it did, make sure you give it a thumbs up. And if it didn't, thumbs it down. It's all good. But ultimately, subscribe for some more Forex content, or just about making money online in general. We live in a world where everyone wants to make money online, and if you're looking for some more help or for some more mentorship with your trading, join me, join the Next Gen family with our academy. We go everything from the A to Z, understanding the markets. I do trainings myself 3 times a week. We have a bunch of other educators that we work with as well. So it only makes sense, and if it makes sense, it makes what? Dollars, baby. So as always, it's your boy RockStarr. I'm out.
Feel just like a rock star.